capital, capabilities, and growth. Unpacking experiences of China, India, and the impact on ASEAN will be moderated by Dato' Hisham Hamdan, the Chief Investment Officer of Khazanah. He will be joined by the following panelists: Avinash Satwalekar, President, Franklin Templeton Asset Management India, Private Limited; Robin Hu, Asia Chairman, Milken Institute and Advisory Senior Director, Temasek; and Wendy Liu, Chief Asia and China Equity Strategist, JP Morgan Security Asia. Over to you, Dato' Hisham.
Good afternoon, guys. Don't leave. I know you're hungry. I am hungry as well. But this is where you're going to learn how to make money. Enough about the theories. So these are the experienced panelists that we have here. Wendy will cover China. She's been working in the past buy side, sell side, 5 different firms from ABN Merrill, UBS, now JP Morgan. Avi also been around the world. After school, he started with Franklin Templeton SF, and then delusionally went to Vietnam to run Vietnam. Franklin Templeton, and then he was in Malaysia for 5 years, and now, he went back to where he started, India. Robin, old hand in this part of the world. Robin, and he had the privilege of watching what happened in China as the CEO of South China Morning Post. You see a number of boards, and recently he was with Temasek, so very experienced. So it's also now is chairman of Milken Asia. So when I look at the room, I think 90% of us here in the room focus on the real economy. I think about 10% that focus on financial economy, and all of them are outside. They're just connecting investment bankers. They just. So that's okay. So we'll try to address about the financial economy and why you should focus, because you're about to go to your retreat, your board meetings, so you can look smart sikit lah, kan? And say listen to Avi and Wendy and Robin and talk about, hey, what's your strategy about dealing with China? What's the strategy about dealing with India? What does that mean? Where are our potatoes? So those kind of things. So I know you're hungry, but as the Chinese say, right? 我饿了我生气 but anyway, let me start with a couple of slides so that put into perspective of where the numbers are. Okay, you can take a photo. Internalize this. This from 1990 as in terms of GDP, where China is, where India was, and also where Malaysia was. And we know it's about 18 trillion, China. And India about 3.5 trillion. Malaysia's, if you look at Malaysia numbers, somewhat similar to where Vietnam, Philippines, and Singapore, about between 400 to 500 billion US dollars. These are based on old exchange rate. I think now our numbers should be higher. But if you look at ASEAN, also about 3.5, India 3.5, 7 plus 18, they're roughly where US is. 25 trillion US dollar GDP. And population, China, India, ASEAN should be almost 3 billion people. US 300 million. I just want to appreciate that, right? The population 10x of the US, economy about the same size. Next, please. Look at the macro. This is GDP per capita. Your country, Malaysia, started much higher. And India and China, and look at where China is. So Malaysia GDP and China, that's the average, is where Shandong is, Shandong province, Robin. Wendy? That's about 12,000 US dollars. And Malaysia needs to be about 15,000 or so, that's where Guangdong is. India roughly about 2005. So these are all countries, started fully good. And look at the size economy. But look at next. This is in terms of MSCI return, TWIR, I think from 1994. Remember China at 18 trillion, significant growth. ASEAN roughly about 3.5 trillion. Look at where the return in China, Malaysia, and ASEAN. The significant disconnect between your economy, your economic growth, and return on this equity. Yeah? And look at India. Bit of scarce, capital scarce, and look at the return. And I think I've seen some numbers. 20-year US dollar TWR is better than even S&P 500. I don't know where the numbers is. So I want you to appreciate that. So if you want the real economy, you want to know, hey, whatever happening in India, whatever happening to China, how do you play? How do you ask your CEO and your head strategy in terms of thinking about that? If you are in investors, you need to be thinking, do I need to be China? Do I play? Do I need to be India? By the way, I must say that our team in India, we have always done significantly well riding this beta. So our position in China, I think all of us who asset owners, asset managers, we make great amount of money up to 2020, but 2021 has been quite painful. And the question then, if you do not want to be in China, how best to ride China growth? China will still grow 4-5% despite the issue. And you want to be in somewhere else, you want to be in a different country. So on that note, Wendy, maybe we should start with you. We heard a lot about the China-US conflict. If you are CEO, if you're on the board, chairman here, right? What's happening in China? Is China still investable? Okay. And if you do not want to be in China, how best to ride the China growth? Do you invest in Indonesia, for example? Do you invest in Australia in order to ride from China's opportunity? Over to you.
Right. So let me focus on where China is right now, because a lot of in the audience are focused on the real economy. And just to start, I'm very thrilled to be part of this joint pursuit of knowledge and acumen organized by Khazanah, because it is critical for us to survive and thrive in this chaotic and dynamic world. So where is China? I think China was in the red hot summer equivalent in Q1 of 2021. That's when Hisham saw the peak returns. But unfortunately, it's since dipped into a winter equivalent by 2022. Then, with reopen in late 2022, we saw it trying to enter the spring in 2023. And it continues to steadily recover. And at this point, in 2024, it is firmly in spring, but has yet to break into summer. So if we look at the 4 seasons and the continuum, it's had a almost 4-year adjustment. And in this adjustment, asset prices have fallen for equities and properties, and you read a lot in the news that property prices have fallen by 20-30% or even more in lower tier cities. And I think along with this, we found something that is new and different and more rewarding, is that businesses and regulators are changing their mindset. It used to be growth, 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 prioritize over cash flow and profitability. Now, because growth is harder to come by, pricing competitions is very fierce, cash flows are difficult to generate. So companies are pulling back, cutting back on capex. So I think for investors, that is actually a good sign. And exchanges and then also the state regulators for SOEs are demanding higher ROE and higher payout. So where are we now? I think we still have some difficult patches because at this point of the cycle, there needs to be clearing events. Asset needs to be transacted at lower prices. NPLs need to be written up. Some of the accounts receivables are going to become impairments and write-offs. But as we see the productive elements being released from less productive entities, they will get absorbed and regrouped in the more competitive enterprises. We're in that process right now. So where are the opportunities for ASEAN and particularly for Malaysia? Our previous panels discussed about supply chain relocation, and in my day-to-day work, I do see a lot of businesses interested in setting up parallel operations offshore, and they may bring technology, access to markets, and etc. The other thing we see within China, which is quite interesting, different, is that people are more gravitating towards services, experiences, spirituality. And I think Malaysia has a lot to offer because it's very multicultural. It's the meeting place of different cultures and different religions. And you see in China, households are willing to spend more money to travel, to join concerts, but they bought their fair shares of clothing and shoes and etc. So this shift is something that is quite phenomenal, and I would like to, share this with everyone in case you're in this business area and may find it useful.
Thank you, Wendy. If we can move to Avi. Avi, you've been around the world, Avi. Start Mumbai, study in the US, Wharton, SF, Vietnam, Malaysia, back to Mumbai. You've been to 45 cities in India. So India had this huge advantage against China in the early days. English, democracy, natural resources, even railways. And then China took off. Great macro, but you can see micro for China not so great for companies. India initially was slow in terms of the macro, but now slowly coming back. But micro story for India has been fantastic. And I can have conversation with Indian CEOs about ROE, and the market been great. Tell us about what's happening in India.
Okay, that's about as broad a question as I can get. So I'm not quite sure where I should start, Hisham, but he did give me fair warning that this was not going to be a fun experience for me. All right, so let's try and kind of break it down a little bit, right? When I look at India, I think what India has done, I mean, the macro-micro point that you were making is very valid, and that goes back to the structure of the economy right from the beginning. Right? I mean, if you look back at Indian history, after independence, it was essentially a socialist republic. Now, socialist at its core means that it's for the people. But at the core of the culture is this entrepreneurial spirit, which is very similar to China. And so what you'll see is a lot of the business groups that became big in India were run by families. Now, their focus has always been on profitability. Because if you do not have that profitability, you cannot reinvest in your business because the state is not providing you with that. And there's a distinction there. Secondly, I'd say is just from I think the vision of what the Indian consumer in terms of experience, that has evolved over the last 20, 30 years. And I think what they're doing right now is essentially, obviously, emulating what's happening globally, and that is driving a lot of investment back into consumption-led companies. The other big difference, I'd say, not so much a difference, but a unique point about India is that it's had a functioning capital market for the longest time. I don't know how many of you know this, but the Bombay Stock Exchange was founded in 1875. Right? This is way before most capital markets. So that culture of capital formation, that culture of trading, that culture of investing is very much embedded in the fabric of just about pretty much every Indian. Now that is a little bit of a paradox because if you look at it, only 5% of the population actually owns equities. Now, anytime you look at a per capita or a percentage of population number, I think the denominator now that we've even surpassed China in that creation, our denominator is massive. So that per capita growth number does look pretty dismal, if you ask me. But when you look at the capital markets, and this is something you were talking about in terms of the micro, right? I was looking at a 40-year history. And the Indian capital equity market, over 40 years, has generated a 16% compounded annual growth rate.
16.
16.
Oh, wow.
1-6.
US dollars.
Over 40 years.
Local currency, US dollars.
Local currency, I think. No, I take that back. US dollars, sorry.
Wow.
So when I look at that, you're saying that for the financial investors, it's very hard to ignore India. I mean, that last chart, Wendy talked about the summer, spring, winter that's happening in China. Just from looking at that chart, it's been a scorching summer for us for a while. Now, does that continue? And I do think that there are a number of factors that would suggest that that will continue. Number one is demographics. I think fundamentally we are a younger population. If you look at a lot of the World Health studies, India will reach peak employment, or that older, when it starts to flip over between the young and the old, in 2063. That flipping has happened already in China in 2021, which changes the entire structure of an economy as you fast forward. So I think that is something, I think there is a lot of inbuilt advantages, but those are not a given. I mean, India comes with a ton of challenges as well, as anybody who has tried to set up a business or expand a business in India knows. But the last thing I'll say is, since we have about 90% that are focused on the real economy, I'll just maybe take a step back and a little bit of an anecdote. This goes back to when I was an analyst and a portfolio manager in the early 2000s in the US, and China was starting to become this massive powerhouse. Pretty much every earnings call, the number one question to every management team was, what is your China strategy? So if you're a manufacturing company, when are you opening your next manufacturing plant in China to take advantage of the lower costs and the better supply chain? If you're a consumer company, how are you going to service the billion Chinese that are waiting to buy your product? Now, of course, as a lot of companies realize that they're not waiting to buy your product. They have better products of their own. But those were the questions, right? And what I'm noticing now is a lot of management teams are being asked, what is your India strategy? And it's almost within those same lines, right? So I do think that there is a shift that's occurring. So, I mean, as you're running your companies, as you're thinking about your company's growth, you should be thinking about how do you leverage a manufacturing base, or how do you drive a product into a large demographic that is relatively open to buying global products.
Yeah, that's interesting. Malaysia is roughly about 12,000 US dollar GDP per capita. India roughly about 2005. How do we do that, right? So that's to meet India's demand. So we got to think about that. But at some point, before you know it, India will move to 5,000 US dollar GDP per capita very quickly. So we got to think about long term. Thank you, Avi. Robin. So this part of the world, our part of the world, and I don't know how many thousand years ago, US and China and India were the two largest economies in the world. And now, looking at it, Wabi Liu, I think I need to study when actually potato was introduced in the Ming Dynasty. Because maybe it's introduced quite late, because I always blame Ming Dynasty for leaving Malacca behind. Otherwise, I'll be somebody else. So I need to study now. Maybe the potato came quite late. So, Robin, Malacca and cities sort of in this were connecting sort of Western demand for Chinese product. Indian traders played a role looking for spices, Moluccas Island. So that was 15th century. What now with the shifting, that economic growth here, and how do you see where are the opportunities, where are the challenges?
Well, thank you, Hisham. I hope potato is served for lunch. Yeah. I particularly appreciate your historical perspective because I think I'm going to go build on that by providing a little bit of history. I think you alluded that as you hint at me to actually talk about ASEAN, which I will. And I think to understand ASEAN is to understand what's going on in India, what's going on in China, and to understand China is to understand what US-China relations is, because China's economic development over the last 80 years cannot be separated from its relationship with US. Let me try to explain that. I think over an 80-year period, I can see that China is going through 5 phases of its relationship with the US. In the 30s and 40s, oddly enough, US and China were allies. In fact, the common enemy was Japan. And in fact, Taiwan is a remnant of the nationalist party, which was an ally to the USA from that era. That has actually become a remnant today. So 1950, the Korean War broke out. So that's the phase 2 of the US-China relations. In fact, there was a hot war between US and China. We might call it a proxy war, but it was much more than a proxy war. It was actually a hot war. And US-China relations went into the cold storage. Fast forward another 20 years, in 1972, you have Nixon, Kissinger meeting Mao Zedong in Beijing. That ushered in a period of thawing relationship between US and China. And that led to the subsequent 20 years of a political yo-yo within China that resulted in the 1989 June 4th fiasco in Tiananmen Square, which then, 3 years later, in the year 1992, that's 20 years after the Mao and the Nixon meeting, that was phase 3, then you saw that the beginning of the golden era of the China's economic development, the one that we all reminiscent and benefited from. And in fact, that was our China narrative, an investment narrative for 20 years, and that was what China was. And China's demographic dividend overlapped beautifully with the curve of globalization, and that resulted in a massive growth for China. In fact, the last 40 years of China's growth was a compound rate of 9.5% in itself, a miracle. And by the way, India's last 20 years was only 6%. So that was phase 4. Unfortunately, come the year 2018, beginning of phase 5 of the relationship of US-China, which is where we are today, the usher in of the great contestation with the introduction of tariff, blacklist for companies, and small fence, small yard high fences, and all that was introduced, and now define the characteristics in essence of the phase 5. Now, if you believe in the 20-year, 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 20-year cycle, then you will believe that the cycle of this great contestation beginning in 2028 is likely to end in the year 2038. And guess what? We still have 14 and 15 years to go in this particular phase. That brings me to say, what does that mean for ASEAN? I think that happened to coincide with the golden period of ASEAN. Why? Well, for a simple reason, the ASEAN is culturally compatible, ideologically at ease, and economically compliant with having to nuance a relationship between major powers. So ASEAN have always made a living over the last 1,000 years under the sphere of influence of either China or India in that period of time. So it is embedded in our DNA to be able to navigate conflict, complexities, and balancing power that is within us for our own benefit and maximizing our own space and benefit. So I think ASEAN has that particular an opportunity for us. And I will say the opportunity for ASEAN is also to look at the opportunity where India is now back building its manufacturing facility and capacity. And that's actually a tremendous opportunity for India. India is the only economy I can think of that has moved from agriculture economy to services economy without going through manufacturing, which tells you how difficult it is to do manufacturing in India. But India has a unique opportunity and God-sent opportunity, in fact, to back build its manufacturing facility, and that's an opportunity they cannot afford to miss. China, on the other hand, knows very well you cannot depend on the US and Europe as the market. So therefore, China looks at the emerging market in Africa, in Middle East, in ASEAN, in Eastern Europe. And those will be the critical market that China will have to develop and expand into. And by blending China's own IP and innovation, together with China's world-class manufacturing capacity and efficiency, you will be able to produce much cheaper, much affordable products and innovation that the developing markets will need. And this is where it is not heartening to hear a conversation to say that Europe needs to defend against deflationary forces from China. US need to defend against deflationary forces from China. Because when you think like this, you are no longer vested in the Chinese market, where the fiercest competition is taking place. By withdrawing from that particular market, you are withdrawing from the potential of future growth, innovation, improvement of your own industry, of your own companies, and then result into the demise, decline of your own industry. So I think that it is important for those markets to stay the course, and for ASEAN, I think we have a golden period of take advantage of China's expansion into the developing economy, taking advantage of India's opportunity to rebuild and back build its manufacturing capacity.
Okay. Thank you, Robin. As Robin said, there's a ready-made potatoes in China that are willing to come here. How do you bring those potatoes? And how do you ensure that diffusion of knowledge is diffused in the native countries of ASEAN? We'll talk about it later. So Wendy, let's go back to you. So mathematically, China needs to grow 4 or 5%. In the past, it's always been about property, export, and investment. At $12,000 US dollar GDP per capita, we know that China needs to increase consumption, but China still maintains the investment at percentage GDP about 43%. That's very high. So there's a lot of backlash in terms of who's going to consume this product of China, right? And secondly, balance sheet recession, if you care to comment. If you need more consumption, if personal household facing balance sheet recession, how does the government encourage people to consume? And we know the local government doesn't have enough money. We know sort of Liu He made that mistake with 4 trillion stimulus, which this thing. What are you thinking about this? Of what the government is doing? What is He Li Feng is doing? What is he thinking? There's a lot of questions there. You can pick any of it.
Just like the first one, I was going to answer part of the first question on investability. Okay, let's charge into this one. I think going back to China's previous pattern of preferring growth over profitability, it is very easy to visualize that in China, you have 707 cities, 2,800 county-level governments, and 34 provinces. They're all competing. So there is an intense over-competition that drives down prices, margins are very different from India, maybe the opposite of India. And that is also the source of over-investing. And I think luckily, because the local governments are having a more difficult fiscal condition, and the corporates, particularly those in the property ecosystem, are having a more difficult time with accounts receivable and selling their products. There is a bit of a capex discipline, which is a good news for investors. Now, coming to the consumer mindset, according to the IMF, which we visited, for a market that has gone through such a large asset price decline, the consumption in China held up better than expected. And it's not people are not consuming, but partly because what they consume, the prices have been coming down. So it's a deflationary pressure. Yeah. And so this deflationary pressure and the weak confidence at the consumer and business level is, like Hisham said, is holding people back. And so lately, since mid-September, we're seeing policymakers making moves. First, with financial regulators coming with different re-lending facilities and housing easing policy. Tomorrow, we're going to have a press conference with the NDRC, which our economist, Haibing Zhu, believes will be focused on structural reform. And clearly, the market is most focused on the size of the fiscal stimulus with different estimates out there, and then we'll be waiting for the Ministry of Finance to announce that, or at some point later this month, we'll hear that from the MPC committee sessions. So I think China has had about 45 months of decline in asset prices, and then we're getting to that stage we're supposed to see NPL write-up, but now we're seeing these different policies and stimulus measures. And in mid-September, if we look at China in terms of MSCI China component, it was trading at slightly over 8 times 12 months forward PE, and the lowest among APAC markets, about 1 standard deviation below historical mean. And since then, the multiples have re-rated by about 35%. And so it's now on par with historical average. And I think Khazanah just made a lot of money in the last 3 weeks. So where does it go from here? I think clearly investors are very focused on whether all these measures can bring in more inflationary and reflationary forces. So China could, to some degree, do more like India. You have nominal prices going up and earnings going up. But I think that has to be proven over multiple quarters of earnings. But suffice to say, it's a process that we're seeing unfolding right now.
Thank you, Wendy. So, Avi, I guess they're all probably thinking, hey, asking the CEO, what is our India strategy? But from Indian company perspective, given what's happening in China, what are they seeing? What are they taking? Are they taking advantage? Is China +1? Or are you just like, because the stock market is doing so well, your GDP so well, that you don't really care? I mean, what's the attitude there? Or any other thing that you want to say?
Sure. No, I don't think it's a question of you don't care. You have to care about what's going on around you. But when you're talking about the China +1, right, I think that's not a new phenomena. I'd moved to Vietnam in 2012, and a great premise of that was because Vietnam was going to benefit as an economy from a China +1. Now, that reason for the shift from China was pure diversification, where you had certain companies that had more than 50-60% of their manufacturing hub being based in China. They needed to naturally diversify, and that was happening. And also, I think China has been seeing labor inflation for over a decade now. It's obviously off of a lot smaller base, but companies that were starting to notice that were starting. So what kind of industries did move to Vietnam? What kind of labor intensive, right? Because that's where you're seeing the most inflation. So you had garments moving, you had footwear moving. Now what you're looking at is a very different kind of China +1 strategy. It is more higher end type or higher value type industries, right? So that's where I think Malaysia can benefit. From an India perspective, is it going to benefit from a China +1 strategy? I think it is is there an opportunity? Yes, there is definitely an opportunity, but it's not a given. India does need to put in a much stronger infrastructure in place. It needs to put in a much stronger supply chain in place, which is something that China has done flawlessly. right? So that is something that India has to develop. Now, having said that, that is something that the government is very clear about, and there's a focus on, a number of you would have heard of this Make in India initiative, right? There are production-linked incentives around it. If you see what's happened from a FDI perspective in India, on average in the last 5 years, it's been about 50 billion a year. Now, just to put that in context, ASEAN as a group had 230 billion in FDI.
Wow.
So it is a fraction. It's about 20% of what has come into ASEAN. So there is a very clear understanding and appreciation of ASEAN and the ability to benefit. I think where India will stand out is something that actually Professor Michael brought up this morning, was in that law of innovation and that inherent ability to kind of innovate within technology. Robin brought up the fact that India has transitioned from agrarian to services, and now it's trying to move into manufacturing. That services element has been incredibly powerful and has been a huge driver of that growth. But to be sustainable, it has to shift into the manufacturing side. And that's why you're seeing. So you are seeing a ton of incentives. You are starting to see a lot of interest. Just in the last 8 months, there's been something like 800 applications for that Make in India initiative. So I think you are starting to see a lot more interest in there. And I think there will be a transition. Now, can it fully take advantage of it? I think there's a ton of competition. And a lot of that competition is in ASEAN. And there's a much clearer focus. So Vietnam is very clear about how it's going to tackle that. Malaysia has gotten much clearer. So you'll see that in the last couple of years in the FDI that has come into Malaysia. So it is going to be very competitive, but yeah, there is going to be this transition to a certain extent.
Thanks, Javier. I'm going to go to Robin. Robin, before that, I mean, you think about what advice can you give to some of the CEO and the board. But before that, I'm going to call my friends here. Can you give a mic to Sunil Kapoor there? He's obviously investing in Malaysia. He's based in Mumbai. Can I get a mic, please? Send to Sunil. Right there. Over there. Yes. Can you stand up, Sunil? Yeah. Sunil, what are you doing? Sunil Kapoor, introduce yourself for 30 seconds, and then what are you doing? Just 2 minutes. We have only 2 minutes.
Thank you. I am involved in the hospitality sector, services sector, and my story is a little different. And my experience has been more in investing in Malaysia. And I must tell you that just taking a step back, a few weeks back, our Honorable Prime Minister Datuk Seri Anwar Ibrahim was there in India. India embraced him. The type of relationship which has developed between the two countries could be felt to the level that when the Prime Minister was leaving the hotel, he even sang an Indian song in the lobby. So that is the type of relationship developing between our countries of humane capital. And last night when I was at the dinner, members of Khazanah talked to me about a very strong part of humane capital. My point to note is, ultimately economies thrive when people to people get attached. People is very important, and India and Malaysia have developed that. An example was for myself, when we put our investments into here, we had planned, being a global company, to bring in a lot of best-in-class people from around the world. And say, for example, hiring about 1,000 people, we would bring about 40% from internationally as part of the initial starting operations. When we
What are you investing? What are you investing in Malaysia?
Sorry. This was in the Malaysian airports. We saw a huge opportunity being the hub and spoke model at Malaysia, being tomorrow this hub for the whole of ASEAN. And Indians are traveling like never before. So automatically this had become the huge center for Indians to move here. Just the number of flights coming in from India to Malaysia from different points has been enormous. I think we may have more than 30, 35 flights a day already coming in and increasing, because India being the largest growing aviation market. But my point, very important note, is that we were pleasantly surprised when we brought our people to train the staff here in our different aspects of catering and hospitality. We finally ended up with 98% of hiring local people, training them up, and they took the job up so well and got trained that we literally didn't have to send all our people back.
So now, what sort of the names of your restaurant that you
okay. This is food business. It's passionate for everybody. We've opened restaurants like Hard Rock Cafe, best in class, brought it in here. We brought in Jamie Oliver. We brought in local brands also, like Jibby Chow, Sirai. And then we brought in brands like Taco Bell. We even brought in a Jollibee into the market in the KLI too. So we even went into smaller markets like Kuching and Kota Kinabalu. And finally, we've changed the game and opened a whole lot of lounges, for example, in Malaysia, which are, again, best in class. And we have ambassadors for the country. So we are very proud of this investment. We're very proud of the way the Malaysian authorities have supported us. MHB has played a level playing ground. And they've had so much of transparency.
Sunil, I had to...
Oh, I can
I have
go
to
on
go
and
back
on.
to
Sorry.
my speaker
Okay.
here.
When
Thank
I
you
talk
so
about
much.
the relationship. Thank you. Okay.
The example of Indian businessmen being very, very positive in Malaysia and find opportunities here. Robin, maybe we have a few minutes. I know we're running out of time. What sort of advice to the CEO and board members, and whether sitting here or Singapore or Malaysia, what sort of advice that you're giving them?
Well, I would like to encourage a gentleman to consider catering for food next year at the Megatrends. Yeah. Well, I think, well, thank you, Hisham. I think I would just touch on the point that 100 years ago, the center of gravity of this world was in the Atlantic, right? Arising from the Industrial Revolution, the creation of wealth, innovation, technologies, colonialism, market access, domination. And then the center of gravity shifted to the Far East, and then we saw the rise of Japan, the Four Dragons, Korea, Taiwan, Hong Kong, Singapore, and now China. And I think the center of gravity is now shifting from the Pacific to the Indian Ocean. In the Indian Ocean, we are seeing that it is a body of water that comprises the Middle East, the Indian subcontinent, ASEAN, and Europe, Eastern Europe in particular. And in that, you can see 80% of the oil that China needs, and China has no energy security, passes through the body of water. It is very important for China to secure the trade route via the particular water, which explains why they build ports in Kuala, Pakistan, in Sri Lanka, on the eastern shore of Africa, and even in the eastern shore of Eastern Europe, in order to be able to secure the ability to trade and for the goods to move. That is making Washington and Delhi very, very uncomfortable, and for good reasons. So I think you will see that the battle for dominance in the Indian Ocean, which will determine who is going to be the truly superpower in the years to come, will see China on one hand and US and India on the other. India, I think, is smarter to be completely in anybody's pocket, but for a period of time, it makes perfect sense for India to align with the US for now. And US will then help India, together with its allies, to back-build manufacturing capacity, supply chain resilience and safety, and so on and so forth, in exchange for India to contain China into the Indian Ocean. And rightly so, just like Japan has done so for the Pacific. So when you see that particular dynamics playing out, then we looked at ourselves. Wow. Actually, there's a lot of business opportunity that will arise from that, because tension creates opportunities. And there is one small body of water that connects the Pacific Ocean with the Indian Ocean, and that is the Straits of Malacca. And Malaysia, therefore, is exceedingly well placed to be able to navigate that particular massive transition of uncertainties and opportunity that will come by building on India's as a rising market, India as a made in India on the rise, China entering into the Indian Ocean to expand into the future of the developing economy and the rising middle class from the Middle East, from ASEAN, from Eastern Europe, and to Indian continent, and then create its own unique offering in that particular process. And I think that's where the future for Malaysia looks to me to be exceedingly bright.
Thank you, Robin. We need to end this, but I'm going to get 30 seconds for each panelist to say something. Avi, 30 seconds, anything. Oh, yeah, go ahead.
Well, I'll just go back to your, what is the messaging at the board level, and that is, there is a very clear opportunity set that has evolved in India. I think India is no longer the same India that it was 30, 40 years ago. I think in the last 10 years, the amount of infrastructure investment that has occurred is dramatic. And so figuring out a way to be a part of that growth and that opportunity set is going to be critically important, I think, for pretty much any company out there. So I would say, definitely, if you're not already exploring that, it is one of those areas that is well worth exploring.
So they should do a board retreat for 1 week, Mumbai, Bangalore, Delhi, and in Agra.
Absolutely.
There you go. Thank you. Wendy, 30 seconds.
China still has a very large GDP. I think it's going to hit 19 trillion US this year. And total social retail sales is going to be about 7 trillion. So there's vast business opportunity. And I would say from an investment standpoint, even though it's gone ex-growth, for active managers, it offers tremendous value. It will need to be knowing what are the types of businesses that will continue to grow revenues and uphold margins and return to shareholders. So this is where it takes more due diligence.
Yeah, just to put in perspective, China, 19 trillion US dollar GDP, is combination of India, ASEAN, South Korea, Taiwan, Japan, and still more than all those countries. Still a lot of economy, a lot of opportunities there for all this company. Robin, 30 seconds.
In the face of great power contestation, which is probably going to last until the year 2038, if you believe in the 20-year analogy, the world needs safe harbor in the form of connected tissues in the form of connected economy and connecting economy. There's no better connecting economy that's acceptable to both sides than ASEAN, with Malaysia, who owns the body of that critical water in Malacca Strait, right in the center of it.
Thank you. So, join me to thank all the three panelists. I'm sorry that I've exceeded the time, but essentially, there are potatoes in China, there are potatoes in India, there are alphabets in China, there are alphabets in India that you can bring here, and so that you guys can make complicated new words. So if you make complicated new words, you don't have to be a price taker, you can be a price setter. Thank you so much. On that note, have a good lunch, everyone.
Thank you, Dato' Hisham and our panelists. Please step forward for a photograph to commemorate this special session.